Hello, this is Curt Pringle, and thank you for tuning in to the Talking Issues series. It's really good to talk public policy issues, and I know some of you look for that and maybe a little of the entertainment value of it, but really today we have a public policy professional, and in an area that we all are involved in and all should care about, and that's taxes, what we pay, how it works, and the funding of government. And really, if you look at the County of Orange, one of the largest government entities in California, we have a directly elected county treasurer. Actually, she is one of four women in the history of Orange County elected to a countywide office. My friend, Orange County Treasurer, Tax Collector, Shari Freidenrich. Glad you're here, Shari.
Thank you for inviting me. I'm honored to be here and to talk about public policy.
Yes, I mean, you were elected to be on the Orange County Treasurer in 2010. Before that, you served a number of years from 1996 to 2010 as the directly elected treasurer of Huntington Beach. I think Huntington Beach is the only city in Orange County that has a directly elected treasurer.
There are some that are not full-time. I think Orange has a elected treasurer.
Really? Oh, and Placentia does too.
And Placentia,
Wow.
but there are several.
I don't like to be wrong, but let's just put it this way. So you think you might be the only full-time directly elected treasurer?
There's very
Or at
few
the time.
full-time treasurers at the municipal level,
Right.
unfortunately, because they play a very important role, as we'll talk about.
Well, yes, they play an important role, but I don't know if we need to directly elect a city treasurer. But you were that, and from that you were able to be elected to the office of Orange County Treasurer. I did a little research, and from 1970 to today, there's only been four directly elected treasurers of Orange County. Of course, Bob Citron was there from 1970 to 1995 when he resigned during the Orange County bankruptcy and all of the challenges there. And then our friend John Morlock followed, and another one after him, and then you were elected in 2010. And it's a huge job. So maybe you could share with folks, what does the treasurer tax collector do? What are the responsibilities of that office?
Well, the main thing, it's all about cash. You talk about cash is king, and cash is really what the treasurer is responsible for. They are the banker for the county. They're also the chief investment officer. So again, it's really all about money and protecting that money because they're a public servant. They work for the residents and the citizens of the county, and their responsibility is to make sure the money stays safe. They have the liquidity to make the expenditures needed that are approved by the Board of Supervisors.
Meaning you can't make investments that tie it up. When the county needs the money to spend, it's got to be there to spend. So you invest those dollars before they're necessary to be spent.
Yes, it's really similar to just working capital at a private company.
Right.
You've got to make payroll every week. You've got to make your vendors. So, government does not usually hold money for long periods of time. The revenues coming in are intended to pay for those expenditures going out. So it's not like a pension plan or deferred comp where you're looking to take the money today and invest it for long periods.
So none of those long-term expenditures like pension obligations and things like that, none of that is in your office.
Not in my office as the county treasurer, but I do sit as an ex officio on the pension board because of the expertise that you should have as the treasurer. It really aligns with sitting on that board where everyone else is appointed or elected, so you don't necessarily have someone that has that technical expertise in the investment.
So where does all the money that comes into your investment structure, where does it come from?
Okay. You want me to open up and show you right here? No, I don't have it with me. Sorry, it's at the bank. Government is funded by taxpayers.
Right.
So there are taxpayers' funds and that are either by state law, property taxes. Those are the ones that I collect, but taxes is what fund governments. Now there are
all property tax that you're known as a treasurer tax collector. Those offices were joined in 1973. So you have both those titles. So I don't introduce you as the Orange County tax collector because I want to keep your good reputation here. But you have that function, right?
Yes, that is the function I have. In fact, Prop 13 consolidated the property taxes to all of the 58 counties here in the state.
I see.
So at that point, they first began now billing for all of those agencies. And we have over 200 agencies that get a portion of the property tax dollar here in Orange County. So that's probably the largest revenue source that's discretionary for the county. But the county also gets state money, state grants. They get federal money to provide certain programs that are dictated by law to be provided.
So if people look at all of their property taxes that they pay,
Yes.
It comes to your office.
It all comes to our office
If
and
you-
then it gets redistributed,
Right.
and we pay it out then to the 200 agencies in the county.
So as we're sitting here in Anaheim, a strip of those dollars go
Yes.
to Anaheim schools. A
Yes.
strip of those property tax dollars go to the city of Anaheim.
Yes.
A portion goes to water districts.
Yes.
So in every single place people are sitting at, in every area of California, a strip of those property tax dollars go to other government entities, not just stay within the county.
Yes, since you are talking about the property tax dollar, there's a little known fact that I tried to publicize as part of public policy, which is very important. In our county, we only get 5 cents of that dollar for the county services. So the services that the county provides, which is in the unincorporated area, plus certainly some of the other functions that we do, the governing board, gets 5 cents versus all of the other counties. We are the lowest in the state, and 62 cents of that property tax dollar that you pay and everyone else pays goes back to the state and gets redistributed to schools. And we are a donor county. So Northern California gets a significant portion of our property tax
Well,
dollar.
they really don't, but it goes to schools.
It goes to schools.
And then and those schools have to be Orange County schools.
No.
Then it goes, and then the state money that comes to schools, we get less state money for schools in Orange
Yes.
County
Yes.
than other places.
Yes.
So
Yes.
so your
You're
point is, if you look at that full dollar, I believe the county of LA gets like 56 cents. or
No,
something.
24 cents
24
about.
cents, but then the city of LA. So I think those combined
Yes.
amounts to the
Yes.
city and county
I
of
agree.
LA is so much more. And
Yes.
that was based upon the law after Prop 13, which basically it's because Orange County was a low property tax
We had
county
orange groves,
at the
right?
time. And we had a conservative tax structure. So you had a lower property tax. Therefore, we now, even to this day, retain a lower percentage of property tax. It really is a challenge. And I don't think a lot of people see how lean and mean the Orange County government is, because it's getting the lowest
Right.
percentage share of property tax of any county in California.
You're exactly right. And I think the other thing to keep in mind, and you brought up, is that the school districts are funded from that property tax dollars, and we're actually the banker for the school district. So
see.
if you know anyone that's a teacher, I'm making sure that check clears when they get their paycheck, because the treasurer is the banker for the school districts plus the community college district.
So after taxes are collected, let's just focus on property tax.
Yep.
You then are responsible for distributing it based upon the prescribed formula as a percentage for every single parcel. A percentage goes to all these different entities that serve that parcel.
Right. The auditor controller actually does the apportionment. I just clear the checks in the bank.
I see.
So my role is to make sure that a dollar doesn't leave the bank unless it has my approval to go out as treasurer or
Right.
current treasurer.
But then some dollars don't go out, right? The dollars stay within your
Yes.
purview.
The county and the school districts all stay within the pooled investments there at the county.
And then you are responsible for investing them to get the maximum safe return that you can.
Yes, safety, liquidity, and then lastly, yield, because yield is important. We all want a return on your money. You wouldn't want someone not getting a return on the money. So certainly all very critical components, but that safety is important,
Right.
because it is short-term money. And then liquidity is you need to make those payments when they're due. So I need to make sure I have enough money in the bank to clear the...
So long before you were there, Orange County, from that office, from the treasurer at the time in 1994, Orange County faced a bankruptcy because of those challenges, right? That you put them in order when you talk about yield and safety, safety being first, liquidity being second, and then yield being third. And what you just told me, the order. Some would say that a prior treasurer had pressure or looked to maximize the yield, maybe ahead of ensuring there was security and safety with those investments.
You're exactly right. Because of being able to, at that time, leverage funds, the state code did not have strict guidelines for some of these. They were able to leverage funds because interest rates, similar to what happened just here in this last year, were at zero, or not quite at zero, but they were low. And so you were really getting not very much yield on the money. And by leveraging, you were able to enhance that yield, which was very attractive until the rates started going up and you couldn't sell those instruments for that principal part of it that was critical in terms of the safety.
Right.
And so when you had to liquidate to make current expenses, you didn't have enough assets of market value to be able to pay your liability.
Yeah, I was told somewhere along the way during my legislative years that some of those dollars that had to be sold were leveraged 7 times. So you had a portion of, you only had to pay a small percentage to hold this asset, and then with that you leveraged that to buy this asset, and then when the interest rate shifted and you had to start selling, that's the time in which you could not sell them for a very high amount. You lost the money, and thus the county went into bankruptcy because of that. So it kind of shows the importance of your office, the steady hand that needs to be there. But also, I mean, the federal government, other regulators, and I know the state legislature, from that point and that example, restricted how county treasurers can invest money.
Yes, there were significant changes that were made at the state to address that issue because they declared the deposit and investment of public funds is a statewide concern. So you are exactly right, because they ended up making some changes on a statewide level.
Yeah, and to make that declaration that's a statewide concern meant the state could tie the hands of local investment officers, local treasurers. And part of that, I mean, and people, who are investing their money, right now, their personal money can buy stocks, they can buy land, they can do a number of things, but they also can just put the money in a bank, and they right now get whatever it is, 1% return, right? That's what they get. And pretty much that's what your hands are tied to, only invest in that most secure type investment.
Right. Well, fixed income, really the bonds are the only allowable type for the treasurer to invest in. That would be where, you're not looking at the growth of a security like a Microsoft or an Apple. You're not into the equity side. And so those fixed income have, some characteristics. They have coupon payments that come and help with cash flow. And then certainly at maturity, you get that principal back based on obviously you hope that that's a high credit, and the state law requires a minimum credit rating to protect the safety of those dollars.
So because of those actions, and because we have a treasurer, at least here in Orange County, with a steady hand, there's no fear and that fund could ever face the challenges it did 30 years ago when it went bankrupt. Right?
No, the laws really have changed
right.
For those. But the state does have some of those laws that have become maze. And this is kind of public policy a little bit, because the state, if it's a must, they have to pay for those services. So when I started as the treasurer in Huntington Beach, they used to reimburse us for the cost to put our policy together and to manage and check compliance. And then over time, that become a maze. So now most counties and cities retain those important structural elements.
Right.
And as a CPA, I definitely am focused on making sure that we are keeping all of those in the right order.
Yeah.
Safety, liquidity, and yield, for the term SLY, as we call it.
Yeah. So is that interesting that just the 2 words you mentioned, and people may not have totally caught that if a state law says a local government must do something, the Constitution says the state budget has to reimburse that local government for the cost of what they're mandating. It's a state mandate, therefore local governments are allowed to be reimbursed for state mandates. So here these counties and cities are doing investment plans, required to do an investment plan every year, and by changing that requirement to be, you may do an investment plan.
Right.
Well, now what cities or counties can say, okay, I'm not going to do an investment plan.
Right.
They're hung out to dry, but the state doesn't have to reimburse for those services now because it's no longer a mandate. It's it's a suggestion. So
It is. And we also, one of the mandates that was in place was this Treasury Oversight Committee.
I see.
And as you may remember, because you were involved in some of the committees and types of things after the bankruptcy, having an oversight committee was important to be able to look and see, are we complying now with that new investment restrictions that have now been put in place?
Right.
And so that is important. And the treasurer really is only responsible for the cash and the depositing of money. The auditor controller is really responsible for the accounting books. And that is, in some ways, really a perfect segregation of duties, which helps protect the taxpayer and the citizen, because you don't want someone who could access cash and access the books, because those create a few of those things you read about that's called fraud.
Yeah.
If you have access to both. So it is really a perfect ability for the treasurer to be able to do their duties of managing and investing money for public policy reasons, making sure it's there, but not worrying about having the issue of this fraud, because usually you have that separation of duties.
So all these local governments that receive money from property tax distribution, they have very limited places where they could put those dollars or invest them, right? I mean,
Yes, I mean, U.S. Treasuries, government sponsored enterprises, Fannie Mae, Freddie Mac, commercial paper, short-term commercial paper, but there are limits. There's a 5-year limit and there's rating limits. And so some are a little more aggressive and some of them are more conservative. In Orange County, because of our history, we have been more conservative. And I will say that currently, right before COVID hit, we had started to accumulate liquidity because we thought, if there is a problem, then we want to make sure that we have the liquidity for it. And it was after that point that, COVID hit and things shut down for a while. And then we wanted to make sure we had a liquidity during that, though we did get a lot of government money coming in.
Right.
And so we kept what we call our duration low. And so when interest rates started going up rapidly, we were able to take advantage. And so right now, we are one of the few counties that has a net asset value of 1.0, which means that I could liquidate today if I needed to and get 100%. I think LA County's at like 95 or 96. That was probably the reporting we got from a couple months ago. And we're probably at one of the highest pooled yields because we recognized before, and then we didn't reach for that yield when those rates were zero. Because of course, this is exactly what happened at Orange County. And I wasn't going to fall into that side of the why before the safety and liquidity.
Right. Interesting. So therefore, your yield, let's say the
return,
percentage return on investment,
yep,
it is low.
Right now we're, probably 4.5 or something.
Okay.
So it is below where the short-term rates are, because we have this inverted yield curve, which is very unusual to have for long periods of time. Normally, the longer you go out with the money, someone's willing to pay you a little more because you've locked up your money. Right now, basically the highest yields are on the very short end, which is, not the normal circumstance.
Yeah.
And so
what does the state treasurer pay in the local agency?
They had a longer duration for us. So they're probably now at 50 basis points below us still.
Okay.
But again, this pooled concept, which we didn't really talk about, but for economies of scale, for public policy, we should be bringing the lowest cost to those services of banking and investment. And so with that, we have this 5-year time frame we can have money invested over, and that allows us to be able to generally have a higher yield than a short-term one-day yield, but certainly not going out too far on that yield curve. So we still have the liquidity.
So when you talk about pooled funds, really, you according to state law, schools in this county, you are the investment officer for those dollars. So they don't have any choice to go to the state treasurer's office or others. They're required by state law to use the county treasurer to make investment, and the county itself, those funds from the county. So you've just recently been able to put all of those funds together to invest them together, pool them, so that you can get better service rates and things like
volume. Ever since the bankruptcy, we've had different funds that were created for different reasons. And as you say, just in November, we then were able to consolidate those funds back together. And now it is much more efficient and cost effective for taxpayers because we want to do these volume trades and have that volume capacity to be able to lower costs.
Right.
Because taxpayers pay all of the costs of government are paid by taxpayers.
Yeah. So when people go to vote every 4 years for a sheriff and a DA, I think people understand what those roles are. Treasurer, tax collector, assessor, auditor, controller, and clerk recorder. Those are the other 4 county offices. And it's kind of hard for people to understand where those differentiations are. So for you to share, your job is to send out tax bills and to collect those dollars, invest them, and distribute them. And the auditor then, as you said, is the one who pays the bills and keeps the books. But the assessor's role is really to set the valuation on the properties. So you don't have anything to do with that. You just take what they say, this is the tax or this is the value for this property, and you send the property tax bill out based on that.
Yes, you're exactly right. So my role, it is hard for people to understand. I try to make it a little simpler. I say the sheriff is to protect the people. I am to protect the people's money. So that makes it simple. I protect your money. You give me money. I am here to make sure it stays safe until it's authorized to go out, and then I will make sure that.
But you don't have a gun, so or we won't talk about that, I guess. But in fact,
it's difficult writing.
So the assessor, though, in terms of setting property values, have the values and property values in Orange County. I mean, are we seeing a drop in values? What is that history? I mean, I think people saw during 2020 and 2021, property values went crazy, up a lot higher than people had thought they would increase during those difficult years. Are we still are you seeing those same types of value increases and changes?
You're exactly right. Real estate in Orange County has really been a strong asset for the county because it's been a strong economy. I mean, you've lived here, your family has had businesses here, started businesses. It really is great. This last year, assessed values were up 6.47 or 41%, I believe.
I see.
And in the last 40 years, there's only been 4 years that the assessed value has dropped below zero.
Meaning it didn't grow. Assessed value didn't increase. And I guessed earlier when you had mentioned that to me that 2009, 2010 were 2 of those, but I didn't guess the other 2 years.
Yes. The bankruptcy and the Great Recession were those 4 years that 94, 95, and then 09 and 910 were, I believe, the years that they went below. But it's not by much in some cases.
Right, but isn't that something? I mean, the overall valuation of private property in Orange County has only seen a dip from growth 4 times in 40 years, 4 years in 40 years. Certainly when there's this global recession in 2008, 9, and 10, you can understand that. But to be honest, I was kind of surprised that it was during the bankruptcy. But
trust in government. If you don't have trust in government, public policy, then people are uncertain and businesses are uncertain. So that's that infrastructure that's important. And that's why government has a very important role in the types of things they do. Now, remember that assessed value is not market value,
right?
Because you're limited by Prop 13. So I'm talking about the assessed value, but there are times, as you say, in 2000, right after COVID hit, when prices probably went up 10 or 15%. So the assessed value is really where you're limited by that 2%.
Right.
By public policy.
So Prop 13 set the valuation at the time in which you buy a property, and that property, even though a year could be worth 10% more, by the assessment, it only can grow 2% a year because of the protections of Prop 13.
Yes, and only if there's 2% inflation. If there's no inflation, your taxes would basically stay the same.
Well, this year we're going to at least get our 2%.
Yes,
and
no
maybe
question.
more. So how has your job changed, or what are the changes you have brought to be more efficient? I mean, if you talk to anybody out there, they'll look at the services that much of government provides, and really question how efficient those services are done. So how do you respond? What efficiencies have you brought with your private sector knowledge?
Well, I use the tagline common sense leadership. So I try to make common sense changes that I think a business would make if you were running it. I look at the money as the people's money, and I really try to put self-service above. So one of the things I focused on in my terms has been making sure I can put everything that is a public record available online. So when I first came, we had only the current tax bill online. And I took a call from a taxpayer that says, I got to fill out my state and federal income tax, but I don't have last year's tax bill. And I'm thinking, okay, 2011. Okay, it must be on the website. No. So we now have 14 years of tax bills on the website. So the CPAs love me. They can go back. So that dropped our incoming phone calls a significant amount. When I came, we had about 160,000 incoming phone calls annually. We are now down to less than 80,000 calls. So an efficiency is we've pushed things to our website so people can self-serve. They can go online at midnight. We've also changed the flavor, and certainly the economy and the new generation, Gen X, all of the people have helped. We've become more electronic payers. So when I started, we had probably 70% were paying by mail. You used to put it in the mail, you relied on the post office to get the money there, and it came. Well, now we're 72% electronic. So we've really moved that, and electronic is so much cheaper than having to take a check, send it to the bank, deposit it, have it bounce, have to go back. I mean, it's very inefficient. So we've really changed the cost of doing that function in terms of taking electronically, getting a file. In fact, this last week, we had almost 50,000 taxpayers pay online in the 5 days before the April 10th, the last payment day. We got in about $420 million from those 50-some thousand taxpayers electronically on our website. So website's important. We scaled up. We didn't kind of do like what happened with the DMV or the EDD. We were able to take that scalability. And so we've really made it consistent. So you can rely on coming in and making that payment here for the county. Again, common sense. We want to take payments. We want you to be able to choose the option. We have the options, and luckily, we're trying to push people into electronic payments, so we've got that.
Yeah. So I mean, so the incentive for the taxpayer is it's easy. They can do it throughout the day or night, or their accountant can without signatures and having to send envelopes and suffer the risk. I mean, isn't that interesting that people worry about mail-in ballots of what could happen in the mail, right? Yet the flip side is they were still mailing in a lot of checks. Now they can do it electronically and have a greater degree of certainty.
Right.
When their payment is received, they're notified of that.
Well, and what happens? We have them all the time where someone puts their check, their deposit in their payment in a Dropbox outside a post office, gets fished out, and they all of a sudden they have fraud on their account, and they immediately know about that. So it really, for the post office, you really should go in and put your check inside, because you don't want anything to happen to that. So I think that that's key, and this trend has allowed us to increase the collection rate almost a full percent, and that collection rate is what the taxpayers pay, and there's a pretty hefty 10% fee if you don't pay timely. So we've really saved taxpayers a lot by increasing the timely payment through all of these methods to make it easy to find your bill online, to make it easy to pay. E-check is free. Credit cards, there is a service fee because it's a gift of public funds. And of course, under public policy, we don't want to be giving a gift to public funds, so there is a charge that's associated with it. We can't adjust that tax like a retailer can to absorb the cost of processing that credit card.
Yeah.
So those are a few of the items that I think we have done that really have helped streamline the operations. I think the other, just specifically here in Orange County, is we have one of the most technologically advanced software systems to handle our processing for our investments and getting in, where we have what we call straight through processing. And so other counties are looking to do some of that. It's where literally we have a Bloomberg terminal. You can make a trade. It's got all the protections, all the controls. It should be transferring the information to our treasury management system, and then we have a feed that goes to our custodial bank. So literally, you can there are a few items we're working on today, but literally it could have not a person's touch and have the proper controls in place. So we really are here in Orange County, I think, looking at how technology can assist us because it lowers costs.
That's great. After the bankruptcy, I think a lot of people, through the service of John Morlock, were able to build back some credibility and confidence in the Treasurer's office, but you certainly have done that since you've been there over all of these years. I should ask you a term limits question, but I won't. And I'll just thank you for being here and spending time with us today and explaining the Office of Treasurer Tax Collector. So thanks, Shari.
Well, I'm honored. Thank you again for having me. And, public policy is very important. Thank you for taking the time to actually do things like this, because public policy is so important. It really drives a lot of the life that you have. You just don't recognize that the public is, the policy is important.
Exactly. Thank you.
Thank you.